All week, we've been getting you ready for the new year by bringing back some familiar market monitor guests. And tonight's guest has three small cap names that he says you may not know about, but could prove to be timely investments. Now, the last time he was on as a market monitor guest back in February of 2017, he recommended these three companies: Tower Semiconductor, which has risen 11% in that time; Knight Swift Transportation, up 12%; Kansas City Southern, up 78% since that time. Eric Marshall's back with us tonight, though, as the market monitor. He's portfolio manager at Hodges Capital. Eric, good to see you again. Welcome back.
It's good to be here, Bill.
And we start with an old name in iron ore. Cleveland Cliffs goes back to the 1800s here in the United States. It's had a very volatile history of various names. It's a small cap now, but it was 10 times this size a decade ago. Why do you like this one right now?
Well, we think this is an interesting situation. The company has really turned itself around over the last 3 or 4 years. They've reinvested heavily back into the business, and we see profitability benefiting from that over the next couple of years. They also just announced a deal to acquire AK Steel, which we think will be a great complementary fit and create additional profits. And we think the stock should be rewarded over the next year because of that.
Tower Semiconductor is second on the list. Why did you pick this one?
Well, this is a company that we think has become very timely again. They are a semiconductor foundry that's really leveraged to the build out of 5G wireless. They make semiconductors that are used in a lot of the equipment that's used to facilitate 5G. And we think that they're at the very beginning of a new growth cycle. We like the valuation there, and we see substantial upside over the next year in that stock.
Yeti just came public last year. It's had a pretty good year so far. Makes those innovative cups that keep things cold and so forth. Why do you like this one?
Yeah, this is a consumer product company that really has some dynamic growth that we think is still ahead of it. And the valuation on it looks relatively compelling here to us. And it's one that's still very much under-owned and still flying underneath the radar. And that's one that we think will be a great consumer pick for us in 2020.
All right, we'll see what happens. Eric, good to see you again. Thank you. Eric Marshall with Hodges Capital tonight.